Sure. And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, and this is for Friday, September 13th. As usual, today we're going to take a look at where the action is in the broader markets. How did we close for the week? And as a general theme, we are going to take a look at bottom fishing, downtrend reversals that are shaping up after last week's very sharp downtrend. And also, as always, going to share with you some of that news that drove price action last week. We did have a couple of key items come in, inflation-related CPI, that core CPI data did show inflation picking up a bit in August, and that spooked the markets. However, from there, we did get PPI data that shows inflation is receding, and that's going to be more wholesale than consumer related, but it was good news for the markets. We also did see jobless claims inch higher. We're back in that mode where bad news is good for the markets. And then also we did see volatility fall. We're going to take a look at that. And we're also going to take a look at some of the groups that really sprung back to life and some of the ways that you can play those moves. Also, earnings were a driver for key areas last week as well. And as a reminder of note, next week, the FOMC will be holding their meeting on Wednesday. The Federal Reserve and Fed Chair Powell will announce their interest rate policy decision. So you will want to keep an eye out for that. We may well see volatility going into that. But for the most part, let's go ahead and take a look at these markets and see where we closed for the week. And here we are with a daily price chart of the S&P 500. What a difference a week makes. We ended last week very much in a downtrend. The S&P 500 below that key 50-day simple moving average. Pretty big volume on that selling, and we had a negative RSI. So as we moved into this week in September, you can see that we had a steady move higher, particularly in the S&P 500. On Tuesday, we did inch back above that key 50-day simple moving average with a positive RSI that has since been confirmed as we move higher above that key moving average. We also have a MACD that did remain in positive territory. We are on the cusp of a black line up through the red, which is a signal of a new uptrend. So we are back in a bullish uptrend. Subscribers to my MEM Edge report will know that on that weekly chart on Sunday's report, we cited that the long-term outlook remained positive and longer-term investors could stay with their positions. And that, of course, remains the case. Let's go ahead and take a look at the Nasdaq. The Nasdaq had a little bit of a tougher go. It did decline quite a bit more. A lot of that having to do, of course, with Nvidia and other semiconductors that fell out of favor. But we did regain that uptrend yesterday. On Thursday, I did send out an alert report, added several names, and we are again with the Nasdaq moving back above that 50-day simple moving average. We do have that black line up through the red in that MACD. It is still in negative territory, but we are seeing a signal of a new uptrend shaping up and pretty good volume on last week's rally, that RSI in positive territory. Now, of course, next week's number could move the markets, but for now, we are in a confirmed near-term uptrend. Let's take a look beneath the surface at those underlying 11 sectors in the S&P 500. And certainly front and center was technology, up quite a bit last week, up over 8%. Very similar to that Nasdaq, where we did have a Thursday regaining of the uptrend in technology stocks, MACD, black line up through the red, and a positive RSI. So technology back in favor. We're going to take a look at some of the sub-industry groupings there and where that relative strength is within technology, as well as select stocks. Moving through, up at the forefront, we do still have those defensive areas sitting up here. That's REIT stocks, utilities, and staples. I will tell you they underperformed outperformed the S&P 500 this week. However, we are also going to take a look at some names in the utility sector. For those of you that are not believers, there was quite a bit of talk last week about a recession. You may want to balance out some of those growthier tech areas with a move that we've seen into these more defensive, but actually there's a growth component in those utility stocks. Also, as we move through, another area that is worth noting is that move back into industrials. The group did pull back last week with recession fears, very cyclical, very economically sensitive area, but a nice regaining of that uptrend, black line up through the red in the industrial sector. Also, as we move through, you will want to be aware of the fact that we did see a nice move into consumer discretionary, up 5.5%. The group really held in quite well. Of course, there are heavyweight names in here that are going to have more of a weighting, and that, of course, is going to be Amazon and Tesla. Both of those names clearly outperformed last week, but there are other areas that I'm going to share with you that are just beginning their downtrend reversal and look quite compelling. From here, we're going to take a look beneath those sectors at some underlying sub-industry groupings. I use ETFs, super helpful as far as really wrapping your arms around where that strength is taking place so that you can get in on it if it is early in that move and potentially participate. So up here at the forefront, this has been a theme for several weeks now. This is IHI, and that is the medical devices ETF. Now, the group overall relatively underperformed, up 2.7% relative to that S&P, up about 4%. But let's take a look at a group that really came to life as the week progressed. Certainly those PPI numbers gave that nice push with the inflation figures showing that they're receding. XHB is the S&P Home Builders Group, and we can see this nice move higher confirmed by a gap up today on big volume. So I'm also going to share with you some add-on plays to this home builders move into XHB, which was up over 6% this week. Moving through, I also wanted to share with you that biotech stocks are moving back into favor. We're going to take a look at some of those Nasdaq 100 names, and one of the top performers, or certainly relative outperformers, is in that biotech space. But it's good to see this because we want to see confidence restored to the markets, and a move into biotechs often signals that. Another area that is coming back into favor, small cap stocks. This is IWM, the Russell 2000, regaining that 50-day simple moving average today, up 4% for the week. This is another very economically sensitive. Any thoughts of a slowdown in the economy, you will see small caps suffer, but they did come back in line with the broader markets. Also of note was a move not quite as convincing, but this is the retail ETF, up almost 3% today, just on the cusp of reversing its downtrend. Bullish RSI. This is an area I talked about as far as potential bottom fishing, or we can also call it bargain hunting, and that XRT area is quite ripe. So also of note here, we want to take a look at the yield on that 10-year Treasury, and it's continuing to generally decline. We're down here at 3.65, and this is going into next week's interest rate decision. Good news there. And one other area that I have not been following as closely on this weekly show, but I have been personally following it, and that is gold. Let's take a look at this move into gold stocks. We had a gap up yesterday and a move higher. This is all about that PPI number and the fact that investors are on the lookout for that 0.25% decline next week at that FOMC meeting. So for those of you that are gold bugs, we did get this nice gap up into a base breakout, super nice volume, and we're just seeing that MACD black line up through the red. So very constructive price action there. As talked about earlier, I'm going to share with you a view of the Nasdaq 100 members. And what I've done is added that relative strength indicator and sorted this group in descending order. So sitting up here are your relative outperformers. And we do still have a number of utility names up here at the forefront, XEL, EXC, but then some newer names. I talked about biotech, and this is Gilead, which experienced this nice base breakout earlier this month, period of consolidation, and now a gap up. The stock looks very convincing here as far as potentially moving higher. This move on that MACD still relatively early. From here, you will want to take a look at that weekly chart, and you'll see that we're just entering into positive territory on that MACD, which signals, of course, we may see further upside ahead. That's something that you can use really for any of your charts as a guide. Also, as we move through taking a look at some of these other names, I'm just going to quickly highlight names that experienced a base breakout last week. Not super compelling, but this is Costco, COST. You can see we had this nice base breakout, bullish momentum, and we did have that black line up through the red last week, but not a lot of volume. Also, we did see Starbucks reverse its recent downtrend. As many of you may know, the company hired the former CEO of Chipotle as their new CEO. And take a look at this big move on Wednesday. This was when the new CEO unveiled his plans and investors liked what they heard. So we did see a subsequent base breakout. We're on the cusp of a black line up through the red with that potential MACD crossover. So from here, let's go ahead and take a look at some other names that were really on the move last week. I talked about, actually, we did not get into the semiconductor sub-industry grouping, so I will share that with you now. SOXX, the group was up 9% last week. Very compelling, however, because we are seeing that RSI now in positive territory. And the big move here is we will want to see a move back above this downward trending 50-day simple moving average to get that uptrend really confirmed. We have a nice double bottom formation here. I will tell you that the group is a bit broken up in the sense that select areas are far outpacing others, and certainly AI-related stocks in semi and elsewhere are the names that are currently last week outperforming. Here's one example, Broadcom, AVGO. The company came out with numbers last week, and this gap down on heavy volume, it was all about the company reducing their growth outlook going forward. However, a deeper dive showed that growth among their AI chip division is on the move higher. It is chip sales elsewhere where they are seeing deterioration. Here's that sharp V-shaped recovery. The stock was up about 20%, but I did want to highlight this high volume on this past week's move higher. We do have that RSI back in positive territory, and likewise with that MACD, nice double bottom formation, so very constructive looking. From here, we're going to take a look at a couple of semiconductor names that are not participating as vibrantly, and there is a compelling reason, but I would keep them on your radar. This is Lam Research, LRCX, and we can see its fall from grace back here in this mid-July peak in price, and this is all about chip equipment manufacturers, and that is an area that is suffering. I talked about chip sales in semiconductor chip sales in general are decelerating, and it is impacting this group the most, but negatively. Let's take a look at this chart. You can see that we had this very steep decline, rally attempt, and another pullback. So in this case, we are seeing a double bottom where you post a low, have a rally attempt. Your second low is at a higher level, not much higher, but certainly it would qualify. Now, from here, as far as the stock potentially becoming a buy, you will want to get this name back up above these downward trending simple moving average. And from here, I'm going to share with you what would need to shape up. We did not have anywhere near as steep of a decline back here earlier this year, but in essence, you will want to get those shorter term moving averages trending upward so that they can act as support instead of as resistance. So when we're talking about bottom fishing, you want to line your ducks up and not get in too early. We still have this RSI. Yes, it's trending upward, but it's not up above 50 yet. We are seeing a MACD black line up through the red. That is encouraging. But again, we do still have more work to do, more overhead supply here. Investors that may have gotten in at this level may want to exit as the stock approaches. But by and large, you will want to get those shorter term moving averages trending upwards. So not prime yet, but certainly one that you can keep on your radar. And another name I talked about, AI related stocks on the move higher. And one of the primary reasons was last week's earnings report from Oracle, ORCL. Take a look at this gap up into a base breakout, super high volume, and then a general trend higher. And their growth is all about AI related initiatives and products. Also, an announcement from Nvidia did drive AI stocks higher as well, with their CEO coming out and talking about the explosive growth that the company is seeing in their Blackwell AI related chip growth. And we can see this nice downtrend reversal. Let's take a look at a name in that AI space that back here had a big gap up in March, nice rally to a peak here in the end of May. And this was all AI driven with Dell and their servers. So we can see from here that the numbers were not good in late May. The stock really fell out of bed. But again, if you're on the lookout, those of you that want to have names that have fallen out of favor could potentially move higher. We can see that Dell is on the cusp of regaining its 50-day simple moving average. We have a positive RSI, and we can see this MACD crossover, get that MACD up there into positive territory. Not so much to my taste. When I'm looking at turnarounds, I will want to see a little bit more by way of a move back above those longer term moving averages. Let's take a look at a power or energy provider in that AI space. This is Eaton, big winner back here, going back to the beginning of the year. And that fallout again among a number of these AI related stocks. We are still early here. ETN is back above that 50-day. We want to get that MACD confirmation. We do have that RSI up here, but certainly one to put on your watch list. I talked about utility stocks, and this is another name, big mover in the race to AI names, Vistra Energy, VST. And you can see we are back above that shorter term and longer term moving average, MACD inching into positive territory, RSI above 50. Now, we will want to, of course, make sure that that move into AI related stocks continues before you venture into some of these AI related names. I share a couple of names here, names that have been clear leaders in the past. This is WSM, Williams Sonoma. We did have a gap up today, a move of that RSI into positive territory, black line up through the red. So when you're talking about bargain hunting or bottom fishing, keep it on the radar. For me, I will need to see more confirmation. We've had downtrend reversal attempts that have faltered. Among other characteristics, you will want to pay attention to that volume. We want to see high volume on this push to reverse that downtrend, and then also vibrancy elsewhere in that industry grouping. We can take a look at another big winner in past periods. A little early here, DKS, Dick's Sporting, also regaining its 50-day. We don't have that bullish move here in that MACD or RSI, so I would not venture into that name at this time. But again, watch list for looking at down and out. Here's Lululemon, LULU, and this is another stock for my taste, would not be super attractive, quite simply because they are seeing their sales deteriorate a bit. But when you're looking at a chart and technically, and perhaps more for a shorter term trade, you can see this move back above that 50-day. We have a nice positive RSI, and we're coming out of an oversold position with this RSI. Oftentimes when you have that push back above that 50-day, again, again, for me, I would need to see further confirmation, get that MACD up into positive territory. But in the end, taking a look at some of these names that are potentially reversing their downtrend, hopefully that's helpful as far as what I would need to see to get back involved. Here we are with XHB, the home builder, and I talked about there are a number of names in this group that look constructive and have a similar look. I do have certainly one of the better names on my MEM Edge report suggested holdings list, but let's take a look at plays as far as auxiliary stocks in the home mortgage, in this case, related area. This is Lending Tree, TREE, and you can see it's had a bit of a dicey period here of late with this recession fears pulling back. And you can see in line with the home builders that TREE, it is a smaller cap stock, but it has regained that uptrend with bullish momentum characteristics. Another potential way to play this move back into home builders, EXP, a cement and building related stock. And you can see that it too has regained its uptrend. We have that black line up through the red with that MACD. And then last up is more furniture related, of course, with home buying, potentially new home buying increasing. You will see the need for products such as Tempur-Pedic, TPX, nice double bottom formation and a move above these key moving average, positive momentum on that RSI. I am going to leave it there. Everyone, hope you had a great weekend. As a reminder, the markets are back in a near and long-term uptrend. For those that would like to get better tuned in as far as areas and specific stocks, go ahead and use that link below to try out my twice weekly MEM Edge report. I did have 2 additional reports that were sent out as alerts as the markets began to firm up last week, and again have recently added several new names. And if you like what you've seen, go ahead and hit that like button. I'll look for you here again next Friday.